Investing, the way you make money appear out of thin air. But we all know about the traditional ways of investing, buying stocks and riding the market up and down for a 10% yearly return, owning a house and paying it off with a 30-year mortgage. But this video's sponsor, Masterworks, gives you a different option, one which could even outperform the stock market in many situations: investing in fine art, something which has traditionally been restricted to the ultra-rich. But while Masterworks claims they've returned as much as a 33% net internal rate of return on some of the paintings they've sold, which would basically double your money every 2.5 years if you got that in stocks, you know I'm not one to just take what people say at face value. And even though Masterworks is paying for this video, legally I have to offer my own opinion and present you with the actual facts behind investing in artwork online. So let's start out by just asking a simple question. Does investing in art or stocks make you more money? And then we'll get into some of the other differences that actually make a bigger impact than you might think. So if we look back at the historical performance of the stock market, we know that it tends to swing up and down in price. That's why people love drawing those squiggly line graphs. But if we look at the market as a whole, which we could represent by looking at the largest 500 US-based companies, we can see that it tends to go up over time. In fact, the stock market has never lost money over a 20-year period. And if we average out all those ups and downs, investing in the stock market over the past century has returned 10% per year on average. Or to put it another way, you would double your money roughly every 7.2 years due to compounding returns. That's pretty good. So how does the art market compare? So first off, the art market is much smaller than the stock market. Just the New York Stock Exchange alone has over $20 trillion worth of companies listed on it. The Nasdaq is another $16 trillion, while the entire fine art market is under $2 trillion. And part of the reason the art market is so much smaller is the art market is primarily a private asset class. This is different from public investing that you're probably used to. Public investing is like investing in public stocks. Anyone can create an account and start putting money into stocks within a few days. Private investing tends to be much more exclusive, and in many cases is restricted to only the super rich. Think multi-million-dollar houses that never go on sale publicly yet are transferred behind the scenes. Private black tie auctions where tens of millions of dollars trade hands behind closed doors. These private markets, while smaller, hold the potential to make wealthy investors millions of dollars. And if we look at the performance of the art market between 1985 and 2018, the contemporary art market returned 7.5% per year versus the 6.5% returned by investment grade bonds. But in some cases, the returns have been much higher. Andy Warhol's famous Four Marylands painting originally sold in 1992 for $950,000. But then in 2015, it sold for a staggering $36 million at a Christie's auction. Jean Basquiat had a painting that once sold for $20,000 go for $110 million in 2017. Now, I want to be clear here. This is just the historical performance of art in general, so it's not Masterworks specific. And in many cases, this does not subtract out the broker's fees paid to the auction houses that are selling the paintings. But those are still some crazy profits that some sellers are making. So if all that's true, why doesn't everyone invest in art? Well, there are a few reasons. First off, investing in art has traditionally been a very expensive process. You need to ship the art. You need to attend an in-person auction. You need insurance to protect it. Plus, you need to actually maintain the art by keeping it clean, keeping it at a good temperature, keeping it out of the sun. And that requires a big chunk of money just to protect your asset. And then, of course, there's the fact that the art market has always been very exclusive. Most people don't have $950,000 lying around to buy a Warhol, even if they knew it would 36x in value over a few decades, which is one of the benefits of Masterworks. On Masterworks' platform, you can buy fractional shares of paintings, so you no longer need enough money to buy the entire painting. You can own a share in the painting that is split with other investors. That makes the formerly exclusive art market accessible to anyone who can download an app on their phone. But that leads us to a very different question. Yes, Masterworks makes it easy to invest in high-value pieces of art while handling the expensive insurance and storing of pieces, but is investing in art worth it in the first place? And what are the downsides of owning art? Well, we already went over how hard it can be to maintain expensive art, but there are a few other reasons that historically art investing has not made too much sense for small investors. Reasons which Masterworks is now addressing. First off, just buying a piece of art has always been an extremely time-intensive process. You actually have to attend an auction or set up a private deal through a broker. Either way, it's more like the process of buying a house than buying a stock. But on Masterworks, buying a share in a piece of art is as simple as going to a piece you like, entering the amount you want to buy, putting a funding source, and you're set. But then there's the other side of the coin. You still have to sell the art once you own it. The second reason people might not invest in art is it's not liquid. With stocks, I can sell at any point and know that there's someone who's willing to buy my shares. That makes stocks almost as good as cash in terms of having access to my money when I need it. But if I have a bunch of money invested in an art piece hanging on my wall, I can't get access to that money without a long sales process first, and it could take months. But Masterworks does have a solution for this. So normally on Masterworks, you do need to wait for them to sell the painting you invested in before you'll get paid out. And that will require them to find a buyer for the painting. But Masterworks also built in a way to let you get paid out before then if you want, making your shares in Masterworks art much more liquid than owning a full-on piece of art that's hanging on your wall. The Masterworks secondary art market allows users to buy and sell shares in the pieces on the platform at whatever price they want. So if I go to Masterworks trading area, I can see shares in pieces of art that people are buying and selling. I can see the implied value of the piece based on those trades, and I can see the latest trade price a share went for. Now I could try to sell a share at the same price if I wanted, or I could manually enter a higher price and hope there's a buyer on the platform who's interested. It's basically just a free market for art, something that's never existed before. But outside of the potential big profits from selling a high value piece, what's the real reason seemingly every rich person loves investing in art? Well, I'm kind of speculating here, but I'm pretty sure the main reason is diversification. In periods of high inflation, investors tend to buy gold as a way to protect their money from getting devalued. But during some of the highest inflation the US has ever seen in the 1970s, art actually increased in value by a huge amount, like gold for example, all while the stock market took a nosedive. Diversification is a way to make sure that if one part of your portfolio is down, like stocks for example, you have other parts of your portfolio that can make up for it. But in order to properly diversify, you need assets that don't move up and down at the same time. Stocks and cryptos, for example, are very highly correlated, and so you're not really diversified if you only own those two assets. When stocks are down, crypto tends to be down too. Art, on the other hand, has a very low correlation with the stock market. In fact, it's close to zero. So it makes sense that wealthy individuals looking to protect their money like to spread it around between stocks, art, and real estate. That way, everything isn't down at the same time. And considering we're heading into a potential recession with 58% of economists expecting a recession later this year, that's something every investor is going to need to consider. And at the same time as we've seen a massive sell-off in the stock market, Masterworks has had 11 exits delivering tens of millions of dollars to their users with net annualized returns ranging from 9 to nearly 40%. Now remember, that's not to say that this performance is guaranteed to continue. As with any investment, investing in an asset is always risky, so it's important to do your own research. And you can see the risk of investing just by looking at the relatively stable S&P 500 coming off its worst year since 2008. But this also helps show why tons of investors are moving into alternative asset classes like art. Now, investing in any asset always carries risk, so it is important to do your research, and despite the secondary market, Masterworks is intended to be a long-term investment with less interim liquidity than you would see in, say, the stock market. So speak to one of their registered representatives to learn more about what kind of art investment, if any, might make sense for your portfolio. And Masterworks also provides a price database that you can use to start your own research. So which is better, stocks or art? I know it'll sound like a cop-out, but it really depends on what you're trying to do. It likely doesn't make sense to invest 100% of your money into art, but then investing 100% into stocks probably doesn't make sense for everyone either. It's important to understand the balance of different assets and build a portfolio that works for you in good times and in bad. So if you're looking for another way to diversify your portfolio and gain access to a market that has traditionally been restricted to the super rich, you can check out Masterworks using the link in the description. And if you like this video, hit subscribe and maybe check out this video next.